Hello again, this is Alex with MasterChartsTrading.com, and this is market recap of Friday the 13th, May 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Only these actions are what keeps this channel going. S&P 500 lost for the week, but jumped over the last 2 days from the bottom. I still think that stocks are in a downtrend, and we may see a bounce, but we're gonna look at overhead resistance and where to potentially sell the stocks short. We will give an actual example by a trader from my service. He traded Royal Caribbean on the short side by buying puts, and we'll see how interesting it is to do that. Exhaustion gap possible on junk bonds. We'll look at junk that adds to the possibility of a bounce. And Treasury bonds also may have bottomed, and we'll look at the interest rate as it spikes but then pulls back. Dollar has surprised many analysts. I consider myself a surprised analyst, and it pushed to new highs for the move, and it just keeps going. And by extension, gold and especially silver completely unraveled, and I think they might be back in a bear market. So let's see what happens. And Bitcoin broke multiple supports. I kept talking about this. I think it's likely headed to 10,000 or lower. And if you're a subscriber, stay tuned. We're going to cover all of these stocks: oil, natural gas, real estate, American Express, Caterpillar, Microsoft, Tesla, etc. And some of the speculative ones that we are actually thinking about shorting or have already opened a short position. So stay tuned for that. We're going to cover many stocks in a subscribe only video. So looking at S&P 500, first of all, how do we trade stocks? So number one, you need to have my indicators. They're called Master Charts Trading Price Action Indicators. You can get them by going to MasterChartsTrading.com and signing up one of the packages there that actually includes the indicators. So once you do sign up, send me a message and I will open the door for you on TradingView.com. For TradingView.com, you only need a free TradingView account, and once I open the door for you, you will be able to display these indicator lines on your chart, which will simplify your trading immensely. So looking at this chart, S&P 500, how do we trade it? How do we think about it? So S&P 500 has closed below this yellow support resistance line, which in my book means that we are now in a downtrend. So these lines, they mark important support resistance levels where traders are likely to make a stand or likely to make a choice. And I think that once we have closed below this yellow line, the bear market started. And for S&P 500, this occurred on April 29th. We bounced a little bit into May 4th, but actually not even enough to touch this red line above. So to me, this would have been a great opportunity to sell short. We didn't really even bounce that high and just collapsed. And we were collapsing most of the week until 12th of May or Thursday, where we hit the bottom at 3855. So, it's a sizable move to the downside already, and now we bounced. So from the bottom of the move on the May 12th to today, we bounced close to 5%. Okay, so let's zoom in and look where we bounced to. So looking at this chart again, we're literally at the yellow support resistance line. I'm gonna zoom in. So notice that today, on Friday, we ended at 4014. This is S&P 500 continuous futures, and the yellow line is at 4014.75. So we literally ran into resistance and closed right below it. This is a normal behavior for a downtrend in security. It will make a lower low and then bounce. and maybe it will continue slightly higher and then make another lower low. So what I'm looking for right this instant is for this security to either continue lower. It's possible that it's going to continue lower, but I think that there is a good chance it will continue higher towards this red support resistance line. And so red support resistance line is currently at 42.12. I think I call this what is called a strong resistance. So there is a good chance that at that point, at around 42.12 currently, unless we make a new lower low, that is a good place to consider opening a short position. So we need to see a bounce and then what's called a tap-in pattern. And if you stay tuned, I'll show you what a potential tap-in pattern is for interest rates for bonds. So as of right this instant, we're basically waiting. If you got in on the short side, definitely I would consider taking profits at this point. Dow Jones, pretty much similar picture. Entered the bear market right there on 29th of April, bounced. Actually, here you were able to get in on the short side if you were like extremely nimble. We're not really trading on the downside. Unfortunately, we were not able to get in on this. But if you were able to get in on the short side for Dow Jones right around 33,900, 33,800, around that area, you would have made nice money already on the downside. So, but overall, because of the correlations between S&P 500 and the general stock market, S&P 500 and Dow Jones are actually pretty much 100%. So yeah, it makes sense for Dow Jones to do the same thing, and it made a new low and then bounced. Again, notice where we bounced to. It bounced exactly to the yellow support resistance line. So we're, bulls and bears are fighting it out, but it's a weak resistance. So I think stronger resistance again is at 33,280, which is at the red line currently. Looking at NASDAQ, that one, really got sold even stronger than S&P 500. If you were able to get in, so NASDAQ was a little bit more clear. Bear market started right there on the 8th of March. We saw a big, strong rally, almost got up as far as the bull market, which was the blue line right there. This is the high from 29th of March. But then turn around, and this is where we want to sell short, right there where I'm hovering, 8th of April. So this would have been a short signal. If you were able to get in, I mean, you just cleaned up, basically. This is 18-20% move in your favor. I mean, if you bought puts, not that far out puts, you can make easily 100% if you bought like less than a year out. So overall, downtrend still, bounce possible, especially for NASDAQ. I think we will definitely get to 12,539, just a few points away. But depending on what the action is going to be like, I want to see if we're going to get to the red line, which is currently at 135.93, which is, still about 10% away from today's prices. So at that point, I would consider the security to be overbought, but within a bigger downtrend. Did that make sense? That statement is super important. If you want to sell stocks short, you need to look for a condition where a security is overbought, but within a bigger downtrend. So at the point where when we're going to get to, if we're going to get to the red line, currently at 135.93, we would be overbought, but within a bigger downtrend. If that didn't make any sense, or if that made sense, do make a comment. I actually read them quite often, and I enjoy talking to people, so do make a comment. This is Russell 2000 Small Caps Index. This one was even more clear, and if you just visually look at this chart, it's pretty obvious. Number one, right there, 18th of January, this is the entry into a bear market. That means at this point I'm thinking, okay, I don't want to be buying this, I want to be selling it. I want to be shorting it. When do I sell short? I sell short on a bounce towards the red line. So we kept making lower lows, and then we bounced. We actually touched the red line where I'm hovering, 10th of February, and then closed below it. That's a signal to sell it short, and you would have been successfully incorrect. Here's another opportunity right there. On the 29th of March, we bounced and we closed above the red line. Okay. If we continued higher from here and closed above the blue line, I would have said, okay, we're done. We're no longer in a downtrend. But what actually happened is we turned around and closed again below this red line. This is our signal. Okay, so high above the red line, close below the red line. But before we hit the blue line, we didn't get to the blue line, you see? So we first closed below the yellow line and then kept going up to the red line and hitting it, and not yet going above the blue line. So we cannot declare a bear market over until we close above the blue line. Did that make any sense to you? Make a comment or just send me a message. You can actually send me a message here on TradingView. If you go to Master Charts Trading, you can go to help and then send me a message. So for small caps, this is how things worked out really well. I mean, if you sold it short right there on the 30th of March or even as late as 5th of April, you cleaned out again 17% in your favor. Beautiful move. Basically it's just a textbook move. So at this point I would consider taking profits, but once again currently we're oversold in the downtrend. So we want to see a condition of overbought and in a downtrend. And our condition of overbought and downtrend would be when we reach the red line, which is currently at 1984. And here's an actual trade. This is going to be a small part of the video for the next however many months or years that we're going to be in a downtrend. And this is how to sell short stocks. How to sell stocks short. Okay, here we're talking about specifically stocks. This is Royal Caribbean Cruises stock. We're also going to specifically be talking about daily chart. So where I'm hovering, you see where it says D. So if you click on that, it would say days. I would not recommend going below days. So I wouldn't do like hours or minutes. So if you want to be day trading, don't use my indicators. They're not gonna work for you. However, let me explain why they're not gonna work for you. So here's, for example, 10-minute chart of Royal Caribbean. Notice there's this gaps here. So this is the 12th of May and this is 13th of May. This is, for example, 11th of May and this is 12th of May. Notice there's a gap, opening gaps. So they mess up the lines and it will not work for you. So stay on a daily chart. Again, each candlestick is a day's worth of activity. So here's what happened on this chart. Royal Caribbean has entered the bear market right there on March 4th, 2022. Would we want to sell it short right there? No, and this is precisely the reason. It's because the downside from this point was quite small. So from 4th of March till bottom of 8th of March was not that big, and the risk was quite large. So we did not sell it short at the point of entry into a bear market. This stock had a substantial bounce from 61 as high as 86, 87 even. Now I'm going to zoom in on this action here from 31st of March until 21st of April. So looking at this action, number one, well, let's start a little earlier. Right there on the 8th of March, we made a low and then continued higher. So notice right here, 18th of March, 19th, 21st of March, when we traded around the red line. Here we came up above the red line, but we never closed below it. So there was no signal to sell it short. Okay, so good, we stayed away from this entry. In fact, after a few days, price continued higher, and look what we got. We got exactly to the blue support resistance line on 31st of March, on 1st of April, and on 5th of April. We tried to get up above the blue line. We failed and we rocked back. Again, on 14th of April, on 19th of April, and on 20th of April, and on 21st of April, we tried to get above this blue support resistance line, and yet again we failed. So this is resistance reaffirmed, but still no signal. You see, our signal came a little bit later. Our signal came right there on 5th of May. Here the price was rejected around the blue support resistance line, which means that at least we did not enter a new bull market. It's great sign. However, it's not always clear cut. So I want to see an actual signal. And the signal came a little bit later. Signal came on the 5th of May. A day later or so, I get this email from a client. On May 5th, he bought RCL, Royal Caribbean puts that were expiring actually really soon. So he bought 5th of May and they were expiring at end of month, May 27th. So literally they were right there. If you ever traded options, then you will know that the closer they are to the expiration date, the more they move, percentage-wise. So on 5th of May, he bought this $75 puts, which were at the money at the time, right at the money. He bought them for $3.70. Next day, the stock gapped down, and it gapped down very little. It gapped down it went down 5%, a little bit over 5%, literally 5.28%. He bought them for $3.70. He sold them for $5.85. That's a 58% gain overnight. All right, but notice that that's not all. He sold them immediately. But I agree because they're expiring super quick. So the risk was quite high that they could expire, even though you're going to be correct, they're going to still expire, against you. So he sold them immediately next day for a huge profit. However, notice what happened later. In a few 1, 2, 3, 4, 5 days, stock lost as much as 23%. So extrapolating from the price, the stock moved 5% to the downside. Profit was 58%. So for each 5% move, we can multiply by 10. The reason again being is because this is such a quick expiration. It's literally less than a month. So the stock moved as much as 23% down. We can easily say that we could have gotten as much as over 200% move in our favor. So if you bought them here at $3.70, they could be like $9 or something like this. So this is how trading on the downside works. Sometimes they just collapse in your favor. But the important thing is how to follow the technique and how to follow thinking. So refer back, try to rewind. If you again don't understand something, send me a message here. Right there, you can send me a message. You can also hit the contact button on MasterChartsTrading.com and find out more about it. Also in the description of the video, look for comments on how to find me and get a hold of me. Okay, so this is how we sell the stocks short. Looking ahead to junk debt, high yield bonds. So as I already showed multiplication, so we can look at weekly charts of junk debt. Here's weekly chart of junk debt. Down below here we have what's called a correlation coefficient. This is mostly positive for high yield bonds to the S&P 500. Notice it spends most of its time in the positive territory. So we can say that junk debt and stocks move together in lockstep. So looking at this chart, this is a weekly chart, by the way, W. So weekly means each candlestick, one of those little things, is a whole week worth of activity. Now, if you're going to be trading on weekly charts, then you need to change the input. Okay, so on my MasterCharts Trading, click on this wheel right there where I'm hovering. There's a little wheel. This will pop up, and then you change the length to 52, because here on daily charts, notice I'm daily charts right now, the length is 250. Okay, here on weekly charts, length is 52. All right. So looking at this chart, it's possible that this is an exhaustion gap. So exhaustion gaps happen at the end of a trend, and from last week of May 2nd to today week of May 9th, there was a gap down. Even though we continued lower, I think it's reasonable to suspect that this is an exhaustion gap. Coupled with the fact that I think stocks are overdue for a bounce, I think together with that, junk that also is overdue for a bounce. I think we can easily rise towards maybe like 100. So maybe about 5% rise from here. It's reasonable to expect that. And again, at that point, I would consider selling it short. I mean, not really a great opportunity. Junk debt really is not a great security to sell short because of the large amount of dividend. But theoretically, this is how I would do it. Okay, moving on to Treasury bonds. Treasury bonds were in a downtrend. We were selling at short. Latest opportunity right there was on 31st of January. That's another 20% down in your favor. However, there is a chance we're going to be bottoming, and the reason why I think we might be bottoming is because of the looking at the government bond yield. So this is a contract for difference, CFD. It's not tradable in the United States, unfortunately, but it is basically, it's pegged to the underlying security. In this case, it's pegged to the underlying U.S. government bond yield. All right, so let's look at it from a daily perspective right there. So this is a ticker symbol US 20Y. This is United States 20-year government bonds yield. All right, it's once again not tradable in the United States, but you can trade it elsewhere if you have an account. So looking at this chart, we have a big spike of interest rate right there on 11th of May. It spiked as high as 3.8% and then pulled back. So very possible that we're topping out, and that's why I'm thinking that Treasury bonds may have reached at least temporary bottom and might bounce as well. So same general principle. Where we bounce into, I think we're going to be bouncing towards the red line. It's a reasonable place to bounce. So from here, from today's prices, we can easily bounce about 10%, which would imply small interest rates, at least in the short term. But the downtrend is pretty obvious. So again, at that point, if or when we get to 128, we might want to consider opening a short position. Okay, and here's the move that surprised many analysts, myself included. This is dollar currency index DXY. Look at the size of this move. Okay, there's the breakout a little bit earlier, July 13, 2021, and you could have gotten in as late as right there, 16th of September 2021. This is an 12 and almost 13% move. You see, I mean, if we can look at euro versus US dollar, this is a collapse. So we would have been selling it short right there. Why do you think we'll be selling it short right there? It's pretty obvious, right? Okay, let's go over it. So for continuous instruments like Forex, we sell short immediately and to close below the red line. So for example, we would have sold short right there on 12th of July with our stop at the blue line. We would have been very correct, especially from this one, latest one, 3rd of September. Let's see how many pips. Again, you would have been still open at this point. This is, I mean, it's a gigantic move. This is a 1,544 pips move. Okay. Now remember that most of the trades are leveraged, so this could have been easily, 50 times more if you have 50 times leverage. Of course, if you have a larger account, you may have like maybe 2-3 times leverage, but still, this is a sweet move. Again, nobody really could predict the move. I was thinking that we're gonna be like bottoming maybe around January. That never happened. We made a new low today. So dollar has surprised many analysts, myself included, by just going into stratosphere. By extension, gold is under pressure. Why is gold under pressure? Because gold is traded in dollars. So this is XAU divided by USD. The lower part of this equation has been pulling this currency pair lower. Now up until relatively recently it wasn't a big deal. So right there, for example, on 8th of March we tapped out. 8th of March we also, what I thought we tapped out for the dollar, but we continued higher. And so this is continued strength for the dollar is weighing on gold, and it's especially weighing on silver. I mean, this is silver. It just collapsed. So notice where the support resistance line came in on 18th of April, exactly at the blue support resistance line, and it unraveled into a bear market. So right this instant, I think that gold is no longer in an uptrend. We're now in a downtrend. So looks like Federal Reserve was most likely successful in their attempt to moderate the inflation. So I think we can say that we're not going to see as big of an inflation in the near term, at least according to the way gold has been acting and dollar has been gaining. So for now, we could consider selling gold and gold miners short, but I think we may see a bounce here. So let's see where we get from that bounce. And finally, looking at Bitcoin. So if you're a subscriber and if you have been following my latest videos, I've been talking about this level right there from 24th of January. So that's about 33,000 or so, basically. So that's the level of the low from the 24th of January. We broke that level right there on 9th of May. And we continued lower to as low as 25.26. So we were seeing a somewhat of a bounce, but again, the trend is clearly down. We can look at Bitcoin on weekly time frame. So here the picture is also pretty good if you're a Bitcoin bear like myself. Currently I'm a bear. Before I was a bull. See, like we were buying it before here, but now notice the downward facing arrows starting in January of this year. So all of them successful trades. Latest trade broke below this low from January 24th. So we're still 2 days. It's currently Friday, and the close for Bitcoin is on Sunday. So we're 2 days away from a weekly close, and currently we are at exactly 30,000 where I'm hovering. So this level right now is retesting this low from week of 21st of June 2021. So this is another important level to watch. I think if we close below it, we could see a total collapse, basically. I think 10,000 would be pretty optimistic, but maybe even lower. It actually makes very little difference what, the fundamental people say about Bitcoin. And I'm talking about, like, I don't know, El Salvador, which thinks that, I don't know what they're doing, actually. It's kind of bizarre. To me, this is pretty clearly not a store of value. It's a tradable instrument. All right, so please don't confuse the two. A store of value would be, I don't know, educating your children. That's a store of value. But this is a tradable instrument. Okay, so at this point, we're basically looking at another. So we broke the support from 24th of January. Now we're looking at a broken support from 21st of June 2021. You see, that's a really bad news. Again, we could continue lower to easily 10,000, and I keep hearing things about stable coins and etc. So they're all collapsing. All right, that's it for this week's recap. Please head over to MasterChartsTrading.com, click on products, click on sign up, and sign up for one of the packages. So trading indicators are these lines on the chart that I just showed you. Basically, they will simplify your life. They're $30 per month. You can get them by first signing up on my site, MasterChartsTrading.com. I will open the door for you on TradingView.com. You open a free TradingView account and send me the name of your account. I don't need your password. I'll open the door for you. You'll have my indicators on your chart on TradingView. If you want just a newsletter, so I send out daily alerts and weekly members-only videos on various stocks. We're gonna cover all of these stocks this week. And if you want both, I think Trading Indicators and newsletters is the best deal at $60 per month. I think it's a wonderful opportunity. If you need more help, for example, personal access, you can register for $259.95 per month, but you also get a 60-minute one-on-one Zoom screen sharing session with me, so you can consider signing up for that. With that, thank you for watching and have another great trading week. Please don't forget to like this channel, to subscribe to this channel, and like this video and share this video with others. Thank you for watching. Bye bye.